Bitcoin, the world's largest cryptocurrency, has plunged sharply this week, breaking key support levels and triggering one of the most aggressive sell-offs in recent memory. The rout has erased huge amounts of value across the crypto market and rattled investors from retail traders to institutional holders. On Thursday, Bitcoin slid below $70,000, marking its weakest level in roughly 15 months, and continued falling toward around $66,000 to $67,000 in global trading. This sell-off marks a stark reversal from Bitcoin's record highs near $126,000 in late 2025. According to market data, the global cryptocurrency market has shed nearly $2 trillion in value since peaking in October 2025, with around $800 billion wiped out in just the past month. 1. Risk-off sentiment in global markets. Investors have shunned risk assets broadly, not just crypto. Turbulence in tech stocks, fears around rising interest rates, and macroeconomic uncertainty has curtailed appetite for speculative holdings. 2. Institutional outflows from Bitcoin ETFs. Bitcoin's recent price weakness is also linked to significant outflows from U.S. spot Bitcoin ETFs, investment products that had previously supplied major inflows into the market. Persistent redemptions have removed buying support and increased downside pressure. 3. Forced liquidations and leverage. As Bitcoin broke below key price levels, highly leveraged traders were forced to close positions, which in turn triggered automated selling. This kind of cascade effect can accelerate a sell-off far beyond straightforward selling pressure. 4. Weakening safe haven narrative. Where some hoped Bitcoin might act as a hedge during uncertain times, the recent sell-off coincided with sharp price swings in traditional safe havens like gold and silver, undermining that narrative for now. 5. Regulatory and policy uncertainty. Concerns about U.S. regulation, stalled crypto legislation, and political shifts have also spooked some investors. Talks with financial regulators over stablecoin rules appear to be making slow progress, adding to uncertainty. Bitcoin is down more than 40% from its October 2025 all-time high. Over the past week alone, approximately $500 billion has been erased from the broader crypto market. Leveraged positions and derivatives markets have seen hundreds of millions in liquidations as prices slide. These losses reflect not only short-term panic selling, but also a shift in sentiment, from exuberance to caution, as investors reassess risk. The mood among participants is mixed. Short-term traders and technical analysts are increasingly wary of further declines, noting that key support levels are under threat. Long-term holders, hodlers, view the drop as a potential buying opportunity, especially if they believe in Bitcoin's future adoption and use case. Institutional investors appear to be pulling back, at least for now, amid wider risk asset rebalancing and macro signals pointing to tighter financial conditions. Some analysts are warning that Bitcoin could continue lower before stabilizing, while others caution that talk of crypto winter may be premature if institutional interest eventually returns. Bitcoin's slide has a contagion effect across cryptocurrencies. Ether and other major tokens have also been pushed into negative territory as traders rotate out of digital assets and into more defensive instruments. The broader market isn't just dealing with price pressure. Liquidity has thinned, trading volumes have fluctuated, and both retail and institutional demand has softened. These conditions intensify volatility and can keep prices in a downward spiral longer than simple sell-offs in other asset classes. There's ongoing debate about whether this latest downturn is a short-term correction or a deeper market reset. Bearish scenario: some market watchers warn Bitcoin could revisit even lower price levels if selling pressure persists and macro conditions worsen. Bullish counterargument: others believe the sell-off may wash out weak holders and set the stage for future growth once macro volatility dissipates and regulatory clarity emerges. What's clear is that Bitcoin's price movements are no longer driven solely by crypto-specific news. Broader economic and financial trends, from interest rate expectations to equity market sentiment, are now major factors in its price discovery process. Bitcoin's recent slide below $70,000 marks a defining moment in its post-bull run narrative. After soaring into record territory in late 2025, the digital asset now faces a tougher environment where macro pressures, institutional sentiment, and market mechanics play a more prominent role. While predictions vary widely, what traders and investors agree on is this: the crypto market is at an inflection point, and the coming weeks will be critical in determining whether Bitcoin merely corrects or enters a more prolonged downtrend. For more news, follow, like, share, and comment.